You know, you've been hearing me talk about how we're going to get a crash in the market. And I don't blame you. It hasn't happened yet. Most people are saying it'll never happen. Oh, it's going to happen. Believe me. And the crash has already started, but most people don't even know it. Let me tell you what's going on, okay? Then you can make the judgment if you think a crash is coming. If we go back and take a look at my chart here, my S&P chart, we got in the S&P right here back in November. Look how the S&P is going up. This is my color-coded chart. If it change to red, obviously we'll start selling it. But here's what's going on. IWM, the small mid-cap stocks, are breaking away. So we got the spiders going up nicely, but we got the most important IWM, small mid-cap stock, was the life of the market, the blood, the heart, is breaking away. Now let's talk about the Magnificent Seven. They're not magnificent anymore. In fact, if you take a look, only Nvidia is carrying this whole stock market. That's right. And a little bit from Microsoft. But Microsoft is even breaking down. But look at this, Meta. Everyone looks at Meta, wow, look at that. Look, what a hot stock. Amazon, wow, look at this, what a hot stock. No, it's not. Just the opposite. When they break away like this and they skip trading, they'll back and fill. Most people lose a lot of money because when they see them going up, they say, get me in, I got to get in. Panic buying before it goes up higher. No, it's going to back and fill. And because that's starting to back and fill, a lot of the people who are buying, investors are buying these Magnificent Seven stocks, are starting to question the Magnificent Seven. Because at the end of the day, Apple is no longer magnificent. Tesla, certainly not magnificent. Matter of fact, we started to short right here. Tesla went from green to red on our color-coded chart. Google, not so magnificent. They're starting to fall apart, aren't they? So what's happening is this. Why is that? Because money supply. There's too much money supply in the stock market. And it's been this way since 2008. We were lied to in 2008. After the crash, Bernanke and then Obama going into January 2009 said to us, look, we're going to increase the money supply. And everybody said, well, wait a minute. When you increase the money supply, that's not really good, because when you increase money supply, that means interest rates go up. That causes a lot of inflation. They both said, oh, we know that. What we're going to do is this. We're going to take that money supply. We're going to go to all the banks that are ready to go under, the biggest banks, and we're going to buy from them their garbage subprime mortgages and their treasuries. We're going to put it on our balance sheet. Now they're going to have the cash. And they're going to have that cash so they can go and loan money to the corporations at zero interest, because the Federal Reserve is going to take and going to drop their Fed rate down from 5% to 0. And then they went and said, we're going to even print more money, a lot more money, called QE. And we're going to buy treasuries, even though the Fed doesn't control the treasury. They certainly go and buy all the treasuries they want, so the yield comes down, so that they can start a housing boom again. This is all money supply. So think about this. All the garbage that came from the banks, the treasury, the subprime loans, the mortgage-backed securities on the balance sheet of the Federal Reserve, that's bad. Because when it's on the balance sheet of the Fed, that means higher interest rates for us. That means inflation. That's why Bernanke and Obama lied to us and said, oh, we're aware of the inflation, putting this garbage on our balance sheet, and higher rates will occur. We know that. That's why we're only going to do this for about a year. 14 years later, they're still doing it. Remember, the first 24 months, they did $3 trillion worth of QE. $3 trillion. That's it. And everybody thought it was over, but it wasn't. Now, all of a sudden, we're up to $40 trillion. 14 years. Keep on propping up the banks, keep on propping up these companies, stock buybacks. Keep using the money to buy your own stocks. That way your price of stock goes up, but you don't have to have any profits to push it up. Prosperity, they called it. Prosperity without profits? Yeah. That's what they were saying. That's what happened. This 14 years, we got a massive money supply, massive inflation. You just don't open up a spigot and start pulling out the money supply. In fact, they did. They did. But guess what happened? While they're pulling the money supply out, they started doing, stocks going to start going down. We can't allow that. So they started to do QE. So at the same time, they're pulling the money out to try to get rid of the inflation the money supply was creating. They're shoveling money back in on this end. So we had that crash in 2018. They just won't give it up. This is very dangerous. So I want you to understand, between the QE they started in 2008, buying all the treasuries to get the 10-year treasury yield down, to get mortgage rates down, taking their own Fed rate, the rate at which they loaned banks, instead of at 5%, they loaned the banks at 0. The banks took that money at 0 interest rates and funded the CEOs. CEOs took that free money, kept purchasing their own stock, so their stock would go up without having to have earnings or profits. Stocks today, they're at $225, are only worth $20, $25. That's how much fluff is in the market. That's where the danger is. Most people don't understand that. These stocks that are at $225, $325, most of those stocks aren't worth $50. 14 years of inflating the price. Remember, the worst inflation is the stock market. Oh, and by the way, who are they blaming for all this inflation? You and me. What? The consumer. A consumer? What do we have to do with it? You're the ones that drove the rate down to 0. With 0 interest, people weren't spending. I didn't create that. You didn't create that. We don't have the power to drop interest rates to 0, but they're trying to lay it off on us. So here we are, 14 years later. The balance sheet of the Fed still topped off at $8 trillion. Inflation still up because of that. Rates are still going to go up. They've been lying to us saying, we're going to cut rates 3 or maybe 6 times. You can't cut rates 3 or 6 times. How are you going to do that when prices are still going up, not down? We still have inflation. They never fought inflation, because to fight inflation means the stock market would come down. So yes, there's going to be a crash. There's no question about it. What I want you to do is this. Again, keep your eye on IWM right here. See IWM? And keep your eye on the spiders. If this divergence continues, right, where you have, again, you got the spiders going up like this, right here, and then you turn around and you got IWM, okay, IWM going the other way, going back down, that is very dangerous right here. See that? And the more that goes down and the spiders go up, the sooner we're going to get a correction that could lead into a 50 to 60% crash. 14 years of inflation. You just don't raise rates 11 times and it goes away. What are you, nuts? Okay. For more information on my stock picks, if you want to try to be a gang member, it's free for 10 days. You get all my charts, 3 charts that I designed, and you're going to have some fun. But you're going to learn how the market works and how the bond market works. That's really important. So that's it. So we're being lied to. 14 years of inflation, and they won't stop. They can't. It's like a drug addict. They just can't. I'll see you on the charts.